गुड आफ्टरनून। कैसे हैं आप लोग? आई होप you all are good and I hope you were able to solve some homework sums of clubbing chapter. Please let me know in the chat box. Good afternoon. Good afternoon. Yes, solved. Okay, so I have also uploaded the solutions. If you were able to solve, you please cross check with them. If you were not able to solve, you try to find out what the issues were, because the homework sums were chosen in a way that they were mostly overlapping with what we have already done in the class. So you should not be having too much of a problem. Okay. And we should first, in today's class, start with today's topic, that is set off and carry forward of losses. Okay. So anybody has any idea of what we are going to talk about? Yes, yes. Okay. So basically, this chapter is talking about that, you pay tax on income, right? But often you can also incur losses from some heads of income. What do you do with the loss? Will you get any benefit of the loss? That is, you pay tax on profits, but what happens about the loss? Are you able to set it off against your profits so that you pay lower tax on net profits, or will you have to pay tax on gross profits from a particular source and just ignore and waste the loss in some other source? Okay, so the provisions of the law will basically tell you what you can set off and what you cannot, what how much you can set off, how much you have to carry forward, when will it lapse, when can it be carried forward, okay, and things like that. How will you set off, which one you will choose first? So the overall concept that we are trying to deal with here is that if you have some loss in a particular assessment year from any head of income, is it a waste, or is it a dead loss, or is it something that you can use to offset against some other taxable profit, reduce some other taxable profit, so that you overall pay less taxes on the net profit? Okay, there are rules and conditions about how you do the set off. Therefore, we are dealing with this chapter. Okay. Inadequate profit cases, losses will be carried forward. Yes. Okay. All right. Next. So we are going to talk about set off and carry forward. The meaning of set off is adjustment of loss against profits from another source or head of income in the same assessment year. And if you cannot do it in the same assessment year because of inadequacy of eligible profits, because of inadequacy of eligible profits. So not because of any other reason. Suppose you have, some eligible profits of another source against which you can set off. But there is something in your mind that this year I am overall falling in low tax bracket. So let me not set off. I will carry forward the loss. Next year, I will fall in high tax bracket. In that year, I will use my old losses and try to reduce the tax in the next year. Can you do that? No. If you have adequate profits to consume your loss, you have to set off. You cannot carry it forward to the next year. That means setting off in the current year or carrying forward to the next year is not a choice that the law has given you. You have to set off in the current year if you have a possibility. And only if you cannot and the law allows you to carry forward, only then you take it to the next year. Is it okay? So it is very important that for carry forward, the prerequisite, the preliminary condition is that you should not have adequate profits in this year. Only then you take the losses to the next year. Okay. Maximum period, how long will you take it? Next year, next to next year, next to next year. How long will you take it? Law has given you the mechanism. 8 years, 4 years, indefinite years, no number of years. There are different provisions for different types of losses. Okay, so we will do that. Okay. Okay. Next, Intersource adjustment. Intersource, interhead. We are going to talk about different concepts like, heads of income. How many heads of income do we have? 5 heads of income. Very good. Right. So, and how many sources of income you can have within each head? There is no such concrete list. Okay. What do I mean when I say that? By heads of income, you all know what are the heads of income. When we say intersource, okay, and then there is a concept of intrahead, intersource, interhead. Who can tell me the difference between intra and inter? Intra means within same, inter means with different. Yes. How will you remember? Have you all heard about intercaste marriage? What are we trying to do over here? We are trying to marry the losses of one source with the profits of another. We are also doing some marriage. Yes. So if you have heard about intercaste marriage, you think on similar lines. When we say interhead, we mean we are doing intercaste marriage, we are doing interhead marriage. We are marrying the losses from one head with the profits of another head. Okay. So that way you remember inter is equivalent to intercaste, which means two different. And intra is something which is not inter, which means within. So if you are marrying the loss from short-term capital loss with the profits from long-term capital gain within the head of capital gains, then this is a case of intersource intrahead. Within one head of income, which is capital gains, you are trying to marry loss and profits of two different sources, which is short-term and long-term capital gain. So are you being able to understand when we say when I say intra-head, what do I mean? Within the same head, within PGBP. Then when I say intersource, it means business income from one business and business loss from another business. This is intersource. When I say within intra-head, when I say same source, means business loss of one head with business gain of from one source with business gain from the same source, from the same type of business. Because there are in some cases restrictions that one type of business loss cannot be set off against one type of business gain. Okay, so you have to be careful about first understand what is intra. Intra means within the same head. Then what is inter? Inter means between two different heads of income. And even if it is intra within the same head, whether it is same source, that is same type of business loss with same type of business gain, or whether it is different sources, example short-term capital loss with long-term capital gain. Okay, and yes, you can also take cue from GST, intra and inter concepts from there. Intra is within, inter is between. Okay, and I gave you the concept of intercaste marriage because what we are trying to do over here, the set off is also marrying losses and profits of two different things. That's why it is very equatable to intercaste marriage also. Okay, all right. So what do you think? From the same, I'm drawing you further from this concept. What do you think in our tradition, in our culture, if you go to your parent with a request for intercaste marriage, and if you go to your parent with a request for intracaste marriage, what will sail through easily? What is easier to convince? Intra, if you say the bride or groom is from the same caste, it is easy to convince your parents. Yes, there are less restrictions. But if you say the bride or groom is from a different caste, there are more restrictions. Parents don't agree easily. Same is the concept here. If you try to do this marriage within the same head, it is easy. Rules are liberal. You get more flexibility to do adjustments. But when you try to do it between two different heads, laws are stricter. They tell you don't do this, don't do that. There are restrictions. Okay? This is how it will help you to understand the logic behind what is allowed and what is not. Ultimately, you need to learn what can be set off, what cannot be. But how will you remember what you have learned? Only if you understand the logic behind it. And these practical life concepts help you to relate to these theoretical concepts and try to remember them. Okay. Also, I have done a lot of homework before this class. I have made one cheat sheet, okay, which summarizes all the content of this entire chapter in one page. The content of this entire chapter in one page. So don't um, focus too much on scribbling or making notes right now, because their notes are already with you in a detailed way. And the easier way to remember all this has already been made by me in a chart form, which I will share with you, and you will be able to easily remember those. That is your cheat sheet, not the sheet you will take to exams to do cheating. It is the sheet you will refer before exams to revise the concept. You will not have to read the entire chapter. You will only see that sheet. Okay? All right. So let's first broadly understand whatever things are, and then as a summary, we will look at that sheet. And then I'll give it to you. You all will keep it with you. Okay? And if you want, you can just take a print. It's a one-pager A4 sheet. You can take a print and put it on your study table or wherever, you can keep looking at it on and off. No problem. Okay. Yes. All right. Intersource adjustment. So section 70. Intersource, by intersource, we mean firstly intrahead. Within the same head, if you want to set off against between two different sources from the same head. So is it allowed? Generally, as per section 70, this is allowed. I told you intra is easy. It is easy to convince your parents. Yes. Ma'am, of previous chapter, you can share short note. Okay, Bhavna, we will see that. Not prepared that yet, but I'll try to do that also. But in my previous chapter, if you see you will see one summary sheet in the slides that I've shared for the previous chapter also. If you look at that, that also gives you quite a glimpse of what things are. But that chapter is not designed in a way that it can be, summarized in a table. But this chapter can be. Okay. So, Bhavna, let me know if that summary sheet helps you, or if you need some notes in a different way, if you need some other learning hacks or something, you let me know. Then I will upload it eventually. You will get it from the same US portal. Okay. All right. Okay. Intersource adjustment. So that's what we were talking about. Within the same head, intra, it's easier to set off. So generally, law says okay, you can set off the loss from one source with the gain of another source within the same head. It is okay. Okay. So generally, it is okay. Sometimes it is not okay. When is it not okay? Loss from an exempt source cannot be set off against income from a taxable source. So now this is a case where you have an exempt source where you otherwise don't pay any tax. Okay, and you are trying to use the loss of an exempt source where even if you had a gain, you would have not paid tax to the government. You are trying to reduce that from income from a taxable source and pay less tax on taxable profit. So this government is saying, no, this is not fair. When I say this income is exempt, I tell you that, okay, you remove it from the scope of income. So when the loss from that source should also be removed from the scope of income and should not be capable of being set off against some other taxable profit. So this you need to keep in mind. If there is a loss from an exempt source, it cannot be set off against income from a taxable source. However, as the amendments are going on, there are very little exempt sources left. Okay, so I mean, if you have, you will definitely apply this, but the number of exempt sources of income is going down, and this is becoming more and more redundant to that extent. Yet there are provisions of exemptions, and if you have, you will remember that loss from exempt source cannot be set off against profit of taxable source. Okay, but otherwise, say loss from one house property can be set off against loss from another house, against income from another house property. You generally have that now. If you have two properties, one is set off, one is self-occupied, the other is deemed to be let out, for example. Or suppose you have three properties. So two are self-occupied and one has to be deemed to be let out. So then you'll have income. When it is self-occupied, you'll mostly have a loss, and when it is let out, you'll mostly have a gain, and then you can set off. So that kind of thing is allowed. And loss from one business, say you have textile business and you have another business, say you have printing business, and you have loss from textile and gain from printing, but they are both within PGBP. You can very much, this much is allowed. Okay, this much is allowed. All right. Next. Permissible intersource set-off. Apart from the exempt taxable example that I gave you, there are some other problems also in this. That is, not everybody is so liberal. Okay, there are some problems within intra head also. Okay, within intersource also, some parents are very, very orthodox. They will not even allow within the same caste if it is from a different kind of subcaste, even that they will not allow. So some parents are very orthodox, and the kind of examples we are talking about in this slide are the very orthodox types. मतलब वो same source में they are within the same head of income, but there is a different source within the same head, that also they are not allowing. Okay, so when it is not allowed, long-term capital loss. Long-term has a problem. Long-term is too long, it has a very high ego. Okay, high ego means very long ego. So short-term capital loss has no such problem. It's okay. You give it short-term capital gain, you give it long-term capital gain, it will get adjusted against both. But long-term capital loss has a long ego. Please write long ego, which means you cannot set off long-term capital loss with anything else other than long-term capital gain. Okay. Anyway, the interhead was not allowed for them. For you will learn eventually also when we do interhead that for capital losses in general, they cannot be set off against income from any other head. Okay, and now long-term capital loss has a further more restriction that it cannot be set off against short-term capital gain. It has such a long ego of long-term capital loss that it can be set off only against long-term capital gain. Okay, long people won't marry short people. Absolutely. See, the marriage example works best because LTCG tax rates are a bit different, ma'am. Whatever be the case, whatever be the logic, long-term capital loss cannot be set off against short-term capital gain. Yeah. Okay. Well, what will happen now? You don't try to equate it with the rates because rates keep changing, but these principles remain the same. Okay, LTCG, since I qualified till date, LTCG rates, STCG rates have changed like anything. So, okay, those provisions keep changing, but these concepts remain the same, at least till they are changed. Okay, so speculation loss. Speculation loss is another type of loss which can only be set off against income from speculation business. It cannot even be set off against income from any other business. Okay. Then loss from the activity of owning and maintaining racehorses. So if somebody does a legal business or activity, this normally falls in the income from other sources. Legal activity of owning and maintaining racehorses, and then he wins stake money. He suppose goes to horse races, and he has one own racehorse. Okay, and he has put stake money on that, and the horse wins. Then the owner also wins. So he gets income from this activity, the stake money that he gets. And what is his expenditure? His expenditure is that of the activity of owning and maintaining racehorse. Whatever expenditure he has incurred to own and maintain the racehorse, that is the expenditure. The stake money that he gets on winning from the horse race, that is the income. Net is the profit or loss. If there is a profit, you pay tax on that. If there is a loss, you can set it off only against profits of this type. Only against profit from the activity of owning and maintaining horse race or race horses. Okay. In short, owning and maintaining race horses, in short, we lovingly call it something. Who will say, what do we call it lovingly? Betting. We lovingly call it, no, betting is a different thing. Betting can be in different other areas also. And this we are talking about the legal form of engaging in this activity. Betting may be legal, may be illegal. Betting is casual income is a different thing. No, casual income is a different thing. Do not mix with OMRH. We call this activity as no riding, no boxing. This activity is called owning and maintaining racehorses. It is OMRH. No Dream 11. You all are confusing it with electronic gaming and betting. That is different. Casual income is different. Okay. Owning and maintaining racehorses, we popularly call it, we in short call it as OMRH. So that when you read the cheat sheets and all, this is how we will refer it to as OMRH, owning and maintaining racehorse. Okay, it is different from casual income. Please don't mix them up. Gambling, no, don't mix. Okay. Loss from specified business. Loss from specified business is also, now specified business means business referred under section 35 AD. Okay. Now, this is applicable only in case of the old regime. That is, if somebody shifts out of the default regime, then there is a 35 AD applicability. Accordingly, if there is a loss from business referred in 35 AD, then you have to consider what to do with that loss. But if you are in the default regime, this whole, whatever we are discussing about specified business is not applicable. Okay. So only in case of old regime, when the person has shifted out of, when the individual assessee has shifted out of the default regime, then the loss in specified business referred in 35 AD can be set off only against any income from specified business. Any other specified business also okay. Suppose there is 1, 2, 3, 4, 4 types of specified business in 35 AD. Suppose, okay, you can set off loss from 1 with income from 3. But you cannot set off loss from specified business with income from any other business. Okay. Okay. This entire discussion is relevant only for the old regime, because in the default regime, this 35 AD thing will not be relevant. Okay. So these are the very orthodox parents. These are the very orthodox parents. Because they don't even allow intra-head intersource set off. They want with not even between two subcastes in one caste. They want the same subcaste also. Okay. Long ego. Long won't marry short. Yes. Okay. So these things you can scribble just to keep these things. Tell tall parents, gambler parents, horse owning parents. Okay. And there are speculative parents also. Okay. All right, but please do not gambler by speculation. Do you mean gambling? No. No, please remove gambler from your list. Speculation is not gambling. Speculation business means what? Speculation business means when you are trading in the shares of other companies. Okay, if you are trading in the shares of other companies, but you are not an investment company, that means your primary objective is not to, your GTI does not mainly consist of interest on securities, income from other sources, capital gains, in or house property, income from house property. So you do not mainly have investment income, and you are also not in the business of banking or lending. Okay, you are not a bank or an NBFC, but you deal or you trade in the shares of other companies. So you are not a bank or NBFC or investment company, but you are dealing or trading in the shares of other companies. Then this business is speculation business. Okay, this is not gambling. This is legal. There is new tax regime. What do in case of specific business? I didn't get this question. Specific means specified. Specified in the default regime, 35 AD is not relevant. This point is not relevant. This point is only for shifting out of default regime. Okay. So that's about the speculation thing. All right. Next, we come to the next. Interhead adjustment. Interhead adjustment, section 71. Here we are talking about intercaste. Okay. So normally Loss from one head, can it be adjusted against income from other head? Yes, except the following. There are more restrictions here. Number one, capital gains. Like I told you, capital losses cannot be set off against income from any other head. Okay. Short ho या long ho, they cannot be set off against income from any other head. Long वाले थोड़े और conservative. Other business loss can be set off by 35 AD business profit. Yes. Yes. When I tell you restrictions, it is about loss from these sources. If you fall in a category where those are liberal ones, the one which is having loss should not be orthodox. The one which is having loss, if it is liberal, like other business, it can be set off against orthodox gains. Okay. Orthodox losses cannot be set off against liberal gains. Liberal losses can be set off against orthodox gains. Do you understand? Do you understand? Yes. Okay. You can write it down also. Orthodox loss cannot be set off against liberal gains. But reverse is true. Liberal losses can be set off against orthodox gains. So when we talk about restrictions, we talk from the perspective of orthodox losses only. ये जो lists है, the list that you see are relating to orthodox losses only. Okay. Okay. Next is, apart from that, PGBP, which kind of, when the net result of PGBP is a loss, such loss cannot be set off against income from salaries. PGBP normally does not have any problem, okay, except that it does not go and offset salaries, because people would do other, it could be used for tax avoidance. Therefore, they are plugging this gap, that if a person is a salaried employee, it just does a regular business, just starts up a business only for the sake of doing something, getting some loss, and then offsetting salary income and not paying tax even on salary income. So lawmakers said, no, wait, salary income, so you need to pay tax. Then you do business loss, you can do business loss. So business loss you can set off against any other head, but not being salaries. Okay, not being salaries. When I say business loss, I also talk about unabsorbed depreciation under section 32(2). Okay, you can set it off against any other head, but not being salaries. Salary is not allowed. You cannot reduce salaries from any within. You can reduce salaries by income from house property, but not business loss. Okay. Loss under the head capital gains, we have already spoken about. Loss under any head other than capital gains, if that is a loss, then you can also set off against under any other head, including capital gains. Again, I told you, orthodox losses cannot be set off against liberal gains, but liberal losses can be set off against orthodox gains. Loss under the head income from house property. Is business loss can be set off against capital gain? Business loss can be set off against all heads other than salaries. If it's a regular business loss, if it's not a specified business loss or a speculative business loss. Okay, it can be including capital gain. Yes? Okay. Loss under the head capital gains, where the net result of computation is a loss, whether short-term or long-term, such capital loss cannot be set off against income. That is the capital gain that we were talking about. Then loss under the head income from house property. Loss from house property cannot be set off against income under the other head if assessee pays tax under default regime. In default regime, loss from house property cannot be set off against any other head. But if the assessee shifts out of default regime and goes back to the old provisions and there is loss from house property, then he can set off against any other head up to 2 lakh rupees. Okay, so provisions of house property are a little different. That in case of default regime, you cannot do intercaste, but in case of old regime, okay, it's a little weird here because you have come to the new regime and you are going more orthodox. Okay, you are going to the progressive regime and you are thinking even backward and saying that no set off. But the older people, the old regime, the ones who made the old regime, the older people, They thought, okay, you do set off, but up to 2 lakhs. Okay, so this is a case, this is a different case. This is a unique case, unique. That people with new thought, new regime, 115 BSc, they are getting more orthodox and saying no set off against, no interhead set off. But the ones who made the old regime, the old people, they allowed interhead set off up to 2 lakhs. Filing return after due date, we will talk about. There are conditions for carry forward and set off of losses, which we will talk about, and which is different for different kinds of losses. Ma'am, in 115 BSc, it is already 0 in set off, and in let out can be set off against different head. In 115 BSc means in default regime, if you have loss from income from house property, you cannot set off against income from other head. Exactly. So intersource, suppose you have one loss, intersource is allowed within, intersource, intrahead within house property, then in default it is allowed. But not against other head in default regime. Okay. What's concessional rate? Actually, 115 BAC, this is when the scheme was brought, it was supposed to be concessional. It is lower, rates are lower than the normal rates. When you shift out of the 115 BAC and you go to the old regime, the rates are higher. Okay. Therefore, this 115 BAC, when it was introduced, it was called concessional regime. But for you, now the way it is the default regime. That's how you call it. Give me example for first point. Loss under any other head other than capital gain. So suppose you have any head other than capital gain. Suppose you have loss under income from other sources. Okay, you can set it off against capital gain income also. You can set it off against any income. Suppose you have loss from income from other sources. You can set off against capital gain. Okay. All right. Okay. When you read these concepts, some point you'll find, yes, okay, it's a logic. I've understood. But when you actually apply in the sums, you may get confused. So this chapter, why I have made a summary cheat sheet is so that you spend less time on remembering the provisions, but more time on applying the provisions. Because even after knowing the provisions, you may tend to get confused. Is business loss can be set off against STCG, LTCG of equity shares gains? Yes, it can be, because business loss cannot be set off only against salary income. It can be set off if it's a normal business loss, not speculative or specified. Okay. All right. Okay, interhead adjustment, there are a few more restrictions. Speculation loss and loss from OMRH cannot be set off against any other head. If they were so orthodox that they could not be set off against different source from the same head, then I'm sure they cannot be set off against any other head, right? So, and same applies to loss from specified business under 35 AD. Okay. Next, carry forward and set off of loss from house property. There's a separate section for house property, section 71B. Just have a look at this. Read this once. I think we already discussed this. It's just given in different words over here. That if the SECI shifts out of old regime, then he can set off against any other head, but up to 2 lakh rupees. If he is in the default regime, then he cannot set off against any other head. Only intra head, intersource is possible. And how many years you can carry forward, the limit given is 8. So if you have unutilized loss, you do not have eligible profits to consume the loss. So you will carry forward up to 8 assessment years immediately following the assessment year in which the loss was first computed. So whatever the loss year is, suppose for you, if the loss year is assessment year 25-26, then 8 years from them, their assessment year 25-26 plus 8 years, that much you can take it forward to. And once a particular 2 lakh for each previous year. Yes, because you need. Why are you saying each previous year? You have a loss of 5 lakhs today. Whether you will set off against any other head 5 lakhs or 2 lakhs is relevant only to this year, na? What you can't set off will anyway get lapsed. Or no, what you can't set off against any other head will be carried forward to the next year, but only to be set off against income from other house property. Okay. Okay. Acha. Next. Carry forward and set off of business losses, section 72. So here, like we said that the Intersource rules we have done, the Intrahead, the Interhead rules we have done, that except salaries, you can go and set off normal business loss with anything. But there are some conditions that it should have been incurred in business. When we say business loss, it should have been incurred in business, profession, or vocation, and it should not be speculative business loss. Otherwise, we would consider it as different. But the other conditions are that the one who has incurred the loss alone is entitled to carry it forward and set off. Okay, one who has incurred the loss can only carry forward and set off. So if losses have been transferred by way of succession, then the successor cannot use the old losses of the predecessor except in case of succession by inheritance. So if there is a case of succession by inheritance, that means I have inherited your property and the person by natural death or something, the person has died, and then somebody has inherited his entire property and his entire income and losses. So losses have also come. Okay, then you can use the old losses. But otherwise, in a case other than succession by inheritance, if you did not incur the loss, somebody else did, and you have just got the losses somehow, then you do not get the right to use those losses. Otherwise, people were using this as a tax avoidance mechanism. Okay, that I have a profitable company, I don't want to pay tax, I acquire a loss-making company, and I use to the losses of the other company, I try to adjust it with my profits and say I will pay less tax now, or I will not pay any tax. I have totally consumed my profits against losses of the other company. Okay, so this, they didn't want this to happen. That's why they said that in case of other than succession by inheritance, which normally nobody can plan inheritance, right? But this kind of amalgamation people can plan, and they can plan to avoid tax. So that's why they said this is not allowed. The transfer of loss will not happen. You choose to amalgamate another company with yours, you do it. But if the other company has loss and you only want to take benefit of that loss, we will not allow that to happen. Okay. And this also can be carried forward for 8 assessment years immediately succeeding the assessment year in which the loss was first computed or incurred. Next, losses in speculation business. Not understand, please give example. Which one? So, ma'am, inheritance allowed. Yes. Inheritance allowed. In case of inheritance, the successor can get the right to set off the losses of predecessor. And the one about example, we are going to do a lot of illustrations. Okay, you will have more than one example to understand everything. So just wait for that. Ma'am, if loss is inherited, it can also be set off against income, any other business under the head PGBP. The set of rules of carry forward will apply the way it is. Okay, there is no separate rule for inherited loss. All right, the only point they were trying to make is whether at all you can carry forward and set off. If you can, then the rules are same as any other loss, like any other business loss, the way they are mentioned. If what you have inherited is a regular business loss, you can set it off against regular business income, because carried forward loss you cannot generally do interhead. Okay. 8 years. So other company loss after amalgamation will be loss written off. Will be dead loss. You don't do anything with it. It doesn't help you. That's why you may have heard about reverse mergers. Reverse mergers. That means a loss-making company acquires profit-making company. So what happens? You have losses of your own. You were the one who incurred the loss. You are entitled to use this loss. You have acquired a profit-making company. So overall, you're not now allowed to set off, because the condition or restriction applies to the person who has incurred the loss. That only the person who has incurred the loss can claim the carry forward and set off. Okay. So I am stationary here. I incurred the loss. I am here. I am not going away. And I have absorbed another profit-making company into me. Overall, my net profit has gone down because I had losses. I got profits, and now my net profit is down. And I pay tax on the net thing. This is allowed because lawmakers have a problem with absorbing losses of somebody else. They don't have a problem with absorbing profits of somebody else. Okay. Okay. Okay, I think it's okay. All right. Now, losses in speculation business. Again, take a minute to read. See if there is something that you did not we have not already spoken about in the last few minutes. Just take a moment to read. Speculation business loss can be set off only against speculation business income, and you cannot set it off against any other source, any other head. And if you could not use it, you will carry it forward up to 4 years. This is different from regular. Regular is 8. This is 4. What is speculation business? Where part of the business consists of purchase and sale. Such company shall be deemed to be carrying on speculation to the extent to which the business consists of the purchase and sale. However, deeming provision should not apply to investment companies or lending, primarily banking or NBFCs, lending companies. So investment or banking lending companies, if they carry on activity of purchase, sale of shares of other companies, they will not be called speculative business owners. Loss from the activity of trading in derivatives is not speculative. Somebody said derivative trading. No, derivatives means you have not read about futures and options. Derivative means where you trade in some instruments which derive their value from real assets, but what you trade in are actually in the air. They do not exist. They just derive their value from real assets. Okay, those are derivatives, futures, options, F&O. Yes. So trading in derivative is not speculative. Trading in shares of other companies, and you may take delivery also, not necessarily intraday. You can take delivery trading also. But if it is not an investment company, if it's not a banking lending company, not an NBFC, then in those cases, if you do too much of, if your business is, trading in shares of other companies, right? That means if you're doing it too often, not, sometimes you're doing it too often to make it a regular activity, to be called business. But your main income is not investment income, and you're not a banking or lending company or NBFC. Okay. Yet, you are doing this business of trading in shares of other companies, then it is speculation business. But people who just do it sometimes on and off, who do not do it regularly, they may not be, considered to be doing business in the first place. So then there is no question of speculation business. Part-time, full-time, we can't say like that. There are conditions about, there is a circular by the CBDT as to, when will you consider it to be business and when will you consider it to be other activity or other sources or capital gains for that matter. Okay, how frequently you are doing. There are a lot of parameters to check. And if based on that, it is considered as business, then it falls in this category, except if your business, if your the nature of your company is an investment company or a banking or a lending company or a NBFC. Okay, all right. Next, losses in specified business. Specified business is section 35 AD. Again, we have already spoken about it. This whole thing is relevant only in the, if you shift out of the default regime, only in the old regime. Okay, that is 35 AD was dealing with, in the old regime, it was dealing with capital expenditure other than land, goodwill, and financial instruments. Okay, you could have claimed deduction of capital expenditure. Normally, you do not get deduction of capital expenditure, but in 35 AD, you could have got, yes. And that, if you make any loss because of all that, then what do? You can set off only against income from specified business, either in that year, and if there is no such profit, then in the subsequent years up to how many years? Indefinitely. Up to indefinitely. This is unique. Very few losses can be carried forward indefinitely. Indefinitely means there is no time limit. Any number of years you can carry forward. Because law wants to incentivize this business. The specified business referred in 3580, they wanted more and more people to do. So they said, and they understood that it's a challenging business. It is a highly capital intensive business. So they allowed you to claim capital expenditure. And it is, also loss making, at least in the initial years, or it has a long gestation period. It takes time to break even in those businesses. Okay, so they have allowed, okay, bhai, no problem. You are doing business which I want you to do for the economy. I will give you the benefit to carry forward your loss indefinitely. Specified business means, for that you need to read section 35 AD, which is in your PGBP chapter. So as and when you do that, you will be able to understand. For now, you just understand that there is a certain category of business which the government, which lawmakers have, which they think are very crucial for the economy. They have referred them in a separate section. They are giving some more benefits. Obviously, because it's a beneficial provision, it is not available in the default regime. It is only available in the old regime. And there is a different kind of treatment for losses from that. Ma'am, because the amount provision, we have to reverse this benefit. Am I correct, ma'am? So we cannot take the benefit. AMT. Oh, because the AMT provision, we have to reverse this benefit. So we cannot take the benefit. I did not understand the question. I have noted it down, Hardik. AMT provision interplay with this. Let me think about it. I will, if I understand, you please rephrase your question. Let me try to understand what you're saying. Relation between AMT and section 35 AD. That you will deal with in when you do PGBP chapter, na? At that time, not taught. Have you been taught MAT and AMT chapter? And you have been taught PGBP chapter also? Oh, AMT and MAT are not in CA intermediate syllabus. Then why are you asking these questions? So basically, my point is, these are not pertaining to this chapter. If it is not in your syllabus, don't get confused. And if we talk about things which are not in your syllabus, it confuses other students also. So let us not talk about this. Okay. On this specific point, I will upload the answer on the BOS portal. If somebody wants to read from academic interest can, but I will not discuss here because I don't want to confuse the students. Okay. First, let me check if I'm at AMT, what kind, how much is in your syllabus, not in your syllabus accordingly. AMT is in the syllabus, somebody saying not in the syllabus. I'm not fully sure about that, whether in your syllabus or not. I'll check. And nevertheless, I will upload this answer on the portal. Okay. Ma'am, speculation point 3. Can you please explain again? Speculation point 3. It is included in total income topic, ma'am. Okay. Somebody is saying not included, somebody is saying included in your syllabus. I am not fully sure of whether it is there in CA intermediate syllabus or not. I'll upload the answer on the BOS portal. If you think it is included, you can go through it. Okay. Yes, somebody's asking point 3 of speculation business. When is a business deemed to be speculation business? Okay, so like I broadly told you, what is speculation business for this purpose? Speculation business means if a company deals in or trades in the shares of another company or if, of other companies, and it is in a way that it is so frequently as to be considered as business, but it is not an investment company. What is an investment company? Investment company is that in whose GTI, whose main sources of income are interest on securities, income from other sources, income from house property, capital gains. Okay, investment income. Their main work, they don't do any other hardcore work. They are not an operations company. They are an investment company. They have got surplus. Generally, you see, companies which are the holding companies of a group of companies. The group of companies are the ones which are working, which are actively doing business, and they're all sending their profits through dividend to the parent company. And this parent company will do what? Will invest the surplus in different things and earn investment income. So if there is some investment company, or if there is some banking company whose job is banking or lending or NBFC, these types of companies, because their business is different, for them this is regular loss, so it will not be called speculation loss. Okay, but for other companies which are doing normal business and they're also doing this so frequently to be called business, then whatever losses are arising from this business is called speculative loss. And there are restrictions on how you set it off and carry forward. Grow Zerodha are different. They are brokers. They are helping you do your business. I mean, they invest your money, not their own money. Okay. When you do trading through Grow or Zerodha, but you do it so frequently as to be called speculation, as to be called business, and you do not fall in the exclusion, then you will be set to do speculation business. You are doing it through Grow and Zerodha, which are intermediaries. Okay. All right. Special business set off only in new regime. Specified business set off only in old regime. It is not relevant. 35 AD is not relevant for default regime. So, ma'am, when NBFC engages in speculation in normal course of business, will they carry losses for 8 years or 4 years? Very good question. Who can answer? NBFC's regular work is this only. They they take others' money and they try to invest and grow it. So their regular business is this business, and it will not be called speculation business in their case. And if it's a regular business loss, the term is 8 years. Absolutely correct. Okay. All right. Capital loss. Capital losses, again, we have already discussed that. What about Intrahead, Intersource? Then short term can be set off against long term, but long term can be set off only against long term. What about interhead? It's not allowed. How many years? 8 years. Okay. And long term capital loss arising from 101 to A, 112A assets, that is equity oriented mutual funds, equity shares, units of mutual trust on which STT is paid. Basically, LTCL from 112A sources, okay, can be set off against LTCG. Why they are specifically mentioning is because a few years back, it was exempt. It used to be exempt. Long-term capital gain from these sources used to be completely exempt. And now it is exempt up to 1,25,000. But, okay, let me put it in a different way. Some minutes back, I told you that loss from an exempt source cannot be set off against income from a taxable source. Did I tell you this? Loss from an exempt source cannot be set off against income from a taxable source. Okay. Now, long-term capital gains from specific sources, I don't know if you have already studied capital gains, but from specific sources, it is not taxable up to 1,25,000, and beyond that, it is taxable. Okay. Okay. Will you say that, ma'am, this is exempt income because up to 1,25,000 lawmakers are not charging any tax? Therefore, if from this source I do incur any loss, then it is going to go waste. I cannot set it off against anything else. Will you say that? Can you think that? Because it will strike you, na? Lawmakers have given you benefit up to 1,25,000. So in a way, it is an exempt source. And so loss from exempt source cannot be set off against income from taxable source. But no. Lawmakers have said that it is not an exempt source of income. It is just taxable at zero rate up to 1,25,000 and at a specific rate beyond that. Okay? Yes. It is not exempt. It is included within the fabric of scope of income. It is, in fact, even in your GTI, it forms a part. It is only in the tax calculation that up to 1,25,000, the tax is zero. Beyond that, the tax is something. Okay? It is, in other words, it is taxable at zero rate, 0% up to 1,25,000. Yes. We are not talking about basic exemption limit adjustment. We are talking about adjustment against other heads. If there is profit, not other head to long-term capital gain, not possible, long-term capital loss. What we are saying is this long-term capital loss can be adjusted against any other long-term capital gain. But you will still have to pay tax on that. You're very correct that you cannot adjust it with basic exemption limit. That means somebody is saying that the person has no other income, has only this much of capital, long-term capital gain. Okay, then can he use his slab, 2,50,000 or whatever against this? So no, you have to still pay tax on long-term capital gain. You cannot set it off against the basic slab. Give example. You will understand. Okay, the next slide is example. Chalo. Somebody wants an example. Okay. So if you wanted an example on this case, we are talking about shares. By shares, you assume we are talking about equity shares subject to STT. That means we are referring to short-term capital gain from under 111A, long-term capital gain under 112. Oh, that is 112 that they have separately mentioned. Okay. Okay. So you have a STCG on sale of shares, 1,50,000. You have brought forward short-term capital loss, 37,000, long-term capital loss, 96,000. Firstly, when you have brought forward losses, you check whether their period has expired or not. That means you have something which is coming from earlier time, right? And they have a definite period of time only up to which they can be extended. There are very few cases which are indefinitely available. For example, one of them we did some time back. Indefinite set off allowed. Of which kind of carry forward loss? Indefinite. You can take it up to any number of years. Yes. Unabsorbed depreciation and 35 AD, specified business. Yes. Yes. So these are the two sources where you can take forward the loss to any number of years. But other than that, there is a limit. There is a number of years only to which it is available, 8 or 4, whatever is the case. So when you see the sum and you see there is something coming from earlier years, first check whether it has expired or it is available. Now, when they say assessment year 23, 24, 24, 25, they're very recent years. They have not yet expired. So it's okay. You can use them. Okay. But in notes, you give that, this loss can be carried forward up to so and so years. And being this year, we are, setting it off. Okay. So there are two types of losses. There are two types of gains. There's some long-term capital gain also. Now, what do you do with the long-term capital loss? Can you set it off against short-term capital gain? No. So you set it off only against long-term capital gain to the extent it is possible. That means to the extent of 75,000. The balance 21,000 will go and get carried forward to the next year and can be set off only against LTCG of the next year. Okay, up to 8 years. And the short-term capital loss can be fully set off against short-term capital gain, and the balance is taxable. Okay, so your note will be on the amount of loss which you have not been able to use. That means 21,000 that we are going to carry forward to the next year, and next year also it will be set off only against LTCG. Okay, ma'am, can STCL which is brought forward be set off by LTCG? Yes, because it is intersource intrahead, and short-term loss doesn't have a problem with long-term gain. It is only long-term capital loss which has a long ego, right? Okay. All right. Okay. Moving to the next slide. Next is about loss from owning and maintaining racehorses. Again, we have already spoken about it, that this is not allowed. I mean, Interhead, so chhod do, it's just not allowed. Even Intra, so Intrahead, Intersource, it is not allowed. You have to use it from the same source also within the same head. Okay. And if you could not use, then 4 years is the limit that you can, because see, lawmakers do not encourage this kind of activity. Any activity which is, where the income is based on an element of luck, they do not encourage too much, right? Therefore, but this is more or less you treat it an income from other sources. There is no head like racehorses. It's true. Okay. And if there had no loss, then also he taxes nil because of 1,25,000 exemption. In which last case, last example. But sir, look at this last case. Long-term capital gain, is it under 112 or 112A? Hmm? 112 doesn't enjoy 1,25,000 limit. It's 112A, specific class of assets. Equity shares, equity-oriented mutual funds, units of business trust, which are subjected to STT. Okay? Take care. Good you ask. At least you get to clarify. Okay. Ma'am, like section 68 incomes are also not allowed to set off. Income, there should be loss. Like casual income, winning from lotteries and all, you cannot set off. Okay, we will do that. We'll do that. So here, when they talk about owning and maintaining race horses, 4 years is only what you can carry forward to, because lawmakers do not encourage activities where you earn from luck. Okay, in principle, and then you lose by luck also, and therefore they don't want to take the pinch of the loss you have incurred because of a luck issue, right? That therefore they don't encourage this. They have only allowed up to 4 years to use this. And what is the amount of loss that is? So in case you have earned any income by way of stake money, then the loss is all revenue expenditure you've incurred for maintaining racehorse minus stake money, whatever is the excess expenditure, that is the loss. And in case you have not earned any income by way of stake money from the racehorse, Then revenue expenditure which have earned incurred only and exclusively for maintaining the racehorse is the total loss. In case of no profits in previous 4 years, then still the limit is 4 years, right? The limit is you can set it off against gain from the activity of owning and maintaining race horses up to 4 years. Now, even in these 4 years, if you eventually make no gain, then the loss will expire. But the law remains the same. Let's do an example. Yeah, okay. So Mr. D has the following income. What is the total income for assessment year 25-26? He has income from activity of owning and maintaining racehorse. He has income from textile business, brought forward textile business loss. Assessment year 24-25 is a recent year, so it is not expired. You can use it. Brought forward loss from owning and maintaining racehorses of assessment year 22-23. 22-23, 4 years carry forward allowed. So 23 24 24 25 25 26, yes, it is still allowed. You can use it. So owning and maintaining racehorse income, you can use brought forward loss from OMRH only, but to the extent of income in this year. So to the extent of 75,000 you have used it. 21,000 still remains. Okay, balance loss to be carried forward to the next year because one more year is remaining. 4 years have not expired. And if you consider the textile business, then there is a profit, there is a loss, you set it off, and the balance is total income. Okay. Stake money means bet money. You are, participating in a horse race. Na? You own race horses. So they are running in a race. And whichever horse wins, the owner of the horse wins. Or whichever, horse the bet is on, the owner of that horse, okay, if whichever horse wins, the person who has betted on that horse will win. So stake money is more or less bet money. If any of that money accrues to the person who is owning and maintaining race horses, then he will reduce the expenditure incurred to maintain race horses, the revenue expenditure incurred to maintain race horses. He will reduce stake money from that, and the net outcome is a profit or loss. How many years? 4 years. So this provision applies to a person who owns and maintains the racehorse. A person who ordinarily is just going and coming and betting in a horse race, okay, who does not own and maintain racehorse, for him his income is like winnings from lotteries, etc. He cannot set it off. Okay. Okay. Order of set off of losses. So suppose you have too many losses and you have some sorts of income in this year. Which you will set off first, which you will set off next, which you will carry forward. You need to know. Somebody has to tell you what to use first, what to use next. Why? Because there are some types of loss like unabsorbed depreciation, which have an indefinite life. You can take it forward to any number of years. And then you have some type of losses like business loss, which has a limited life of 8 years. So you may want you may want to buy, I would like to use this first and that next, so that I can enjoy the benefit for a longer period. So law has given you the order in which you need to set off of the losses. So if you have a business loss, then you have to first set it off against current year's depreciation, then current year's capital expenditure on scientific research, current year's expenditure on family planning to the extent allowed, then brought forward loss from business, then unabsorbed depreciation, then unabsorbed capital expenditure on scientific research, then unabsorbed expenditure on family planning. So this is the order in which your business loss will be first set off. Okay, this you need to remember. Current year depreciation, current year capex. So CYD, current year depreciation. Current year capex on SR and family planning. SRFP. Brought forward business loss. Unabsorbed depreciation. unabsorbed capital expenditure on scientific research, unabsorbed capital expenditure on family planning. So you need to remember. Okay. Okay. Submission of return of losses. Somebody saying, ma'am, like 1/5 of the part is only allowed to the carried to the company, then also loss can be there. Then also loss can be there. Yes. To the extent allowed, you will claim first, and beyond that, there can be loss. But what they are talking about set off of business loss. You have regular business loss. You will set it off against what first? You will set it off first against you will set it off first against current year depreciation, then current year capital expenditure on scientific research and family planning to the extent allowed, then brought forward business loss. Then unabsorbed depreciation, then unabsorbed capital expenditure. So you have current year business income and you will use that like that. So ma'am, first current year, then previous year. Yes, first current year, because see, first set off, then set off of carried forward loss. Okay. You may want to do first set off of carried forward loss because that comes with an expiry date. You may want to do FIFO method. First in, first out. Then the current year loss to be set off. But the law doesn't want you to do like that, because their principle is first you use whatever is happening in the current year. After set off of current year things, then you go to set off of carried forward thing. Okay. All right. Next is submission of return of loss. Somebody was saying that, ma'am, what if I timely file return? What if I don't? So yes, so there are some provisions that in which cases you can carry forward the loss and which case you cannot. Depends on whether you have timely filed the return or not. So which return has to be filed timely? The year in which the loss arose and you want to carry it forward, that year's return should be filed timely. Then in the year in which you want to set off the carried forward loss, that year's return you may or may not file timely. Is it okay? The year in which the loss arose, that return must be filed timely to lodge a claim to carry forward the loss. But the year in which you use or set off the carried forward loss, in that year you may or may not file a timely return. Okay. So timely return principles to whatever losses it applies. Timely return in year in which loss arose. Okay. For which loss you need timely return? For business loss, for speculation business loss, for specified business loss, for capital loss, for owning and maintaining. What are we missing out? We are missing out salary in head. Is there any loss in salary head? Is there any possibility? So salary is out of picture. Then in what else we are missing? We are missing unabsorbed depreciation. That means unabsorbed depreciation, even if you don't file timely return, you can carry it forward. Then we are missing income from house property, which means if you have loss from house property, even if you do not file timely return, you can carry it forward. Okay, so this matters because the general rule is that if you don't file timely return, you cannot carry forward the loss. OMRH is very much there in the general list. See, racehorse. The exception is house property and unabsorbed depreciation. So you need to remember this, that in these two cases, even if you do not file timely return, you can carry forward the loss. Okay. Unabsorbed depreciation can be carried forward indefinitely. Yes. And the section which talks about unabsorbed depreciation is not this section range of section 70 to 74 or things like that. It is actually 32.2. It is coming from PGBP section only. Yeah. Okay. Okay. This is a brief summary, but this is not the cheat sheet that I was talking about. This is just have a look at this if you have anything that you did not understand or let's not spend time on this. Let me just quickly open the cheat sheet. Because that is a superset of this. It includes everything anyway. This is the cheat sheet. This is what you're going to read before exams. So please read carefully. And while I show this, we will take a break. This time the break will be for 10 minutes. People who come back after early will read the screen. Okay? You will continue to read the screen. If you come back early, that means we are going to resume the class at 3:55 when we are going to start questions. But the extra 5 minutes are given to read this sheet and ask anything if you have not understood, because this is only summarizing all that we have already discussed. Okay? Tech support. Yes, so hello, are you all back? Please confirm on the chat box. Yes, ma'am. Yes, ma'am. Okay, so you're liking the class, y'all are awake, you're understanding. And the cheat sheet that is displayed on the screen, you are able to relate with the discussion that we have had. Anything new to you, anything you're not understanding? Ma'am, in case of serial number 457, long-term capital loss, specified business, speculation business, losses brought forward can't be set off against gains of similar nature but different sources. Example, capital gains on different asset, gains on PGB. They can be set off against similar nature but not different sources. I would rather put it like that. Okay? They can be set off against gains of similar nature. Same source allowed. Different source, same head not allowed. Different head, forget it. Not at all allowed. Is it okay? See now there's a column on same source. See it's yes for them also. 4, 5 and 7. But it's a no in the different source intra-head column. Did you understand? Points 4, 5. Brought forward business loss can be set off only by person who incurred the loss, except in case of succession by inheritance. We discussed that. Order of set off of business loss first 1, 2, 3, 4, 5, 6. We discussed that. 1,25,000 point is that you long-term capital gains under section 112A are not taxable up to 1,25,000. Don't treat it as exempt income. Treat it as taxable at 0% up to 1,25,000. When you treat it as taxable at 0 rate, you will be able to do set off easily. If you think it as exempt, then you will not be able to do set off. Okay, and that was the only point. 2 lakh income from house property limit is for interhead or only for salary? Interhead. Interhead against any head. Owning and maintaining race horses. OMRH means owning and maintaining race horses. Ma'am, if loss, wait. Ma'am, unabsorbed depreciation only allowed under optional scheme regime. No. Unabsorbed depreciation pertaining to additional depreciation under section 3212A. Okay. Unabsorbed, refer point number 9, everybody. Yes, it is a new point. I did not discuss, so I will discuss now. Unabsorbed depreciation attributable to section 3212A. When you do business income chapter, you will find there is a section which talks about additional depreciation. That additional depreciation has to be foregone by a person who opts under the default regime. You don't get it. It is a benefit you don't get in the default regime. You can get if you opt out of the default regime. Okay. So let's call it old regime. So if your unabsorbed depreciation relates to the additional depreciation which could not be used, okay, then you do not get it in the, it is not relevant in the default regime. You should not get it. Therefore, you will not even get the loss set off carry forward properties. Okay, but if you have unabsorbed additional depreciation under the old regime, you can use it like any other unabsorbed depreciation. Okay, that is point number 9 and 10. Point number 9 is relating to unabsorbed additional depreciation of 3212A. Okay, and if person chooses for default regime, if person remains under default regime. And point 10 covers unabsorbed depreciation of any other case, which means even if not attributable to 3212A, or if person is opting out of default regime. In all those cases, all the other unabsorbed depreciation has same principles, which have been discussed in point number 10. Ma'am, but if loss is by selling land and gain later is by selling other asset, won't the source change? I assume you're talking about capital gains. So land, when you say land and any other asset, I assume you talk about capital asset. So source has changed. By source in the context of capital gains, source refers to short term or long term, doesn't refer to the type of capital asset. Okay. So the lens that you see them from is short term or long term, not from the lens of this A capital asset or B capital asset. Assuming all of them are exempt taxable sources, then you don't see them differently. Okay. So only, ma'am, 115 BSc means default regime. Yes, yes. 115 BSc means default regime. I hope you know the section. In a lot of questions, you will be given that assume the person is remains under 115 BSc. So what will you understand? This is default regime. Assume person opts out of 115 BSc. What do you understand? He's opting out of default regime. Ma'am, understood in default regime not applicable. LTC or STC. Okay, ma'am. So only additional depreciation carry forward benefit will be wheel off, rest can be taken. Yes. So because additional depreciation is not allowed in the default regime, therefore any benefit coming from that, from the earlier years, because say in the earlier years you were not in the default regime, so you have some benefit coming from that. But in the current year you are in default regime and you cannot take that benefit. You have to let it go waste. This table is very helpful. Thank you. Thank you. Okay. So please take a photo for the time being of this table on your phones. Okay. I am going to upload this on the BOS portal after the class, but this will help you in solving the sums. So just click it. I'm going to change the screen now, but just click this and keep it with you guys. Okay. All right, let's move. I hope you all have downloaded the assignments. So questions are available with you. I'm not displaying the questions. I'll just open the whiteboard to do the solutions. Okay. So I hope the assignments and the questions are open to you. When I read out question number 1, you please confirm if you have that set or not. Mr. A, aged 35 years. Can you see that? Ma'am, notes 0.5 bata do. Notes 0.5 bata do bhai. Kya tha 0.5? What was 0.5? I have removed that screen. What was 0.5? Questions are there with us. Okay. Please don't do these drawings on the whiteboard. Hmm? Okay. Thank you. Thank you. Thank you. Thank you. Okay. So please read question number 1 about Mr. A. And somebody said 0.5 bata do. What is the 0.5 if you can help me with? Then I can tell you. Or you do something. You elaborate the 0.5 in the BOS portal. 5 point order of set off of business loss current year. We did in one slide now. You refer to the detailed deck that has been uploaded as notes. There is one complete slide on the order of set off. That if there is business loss, what you first set off against current business. You first set off the current year depreciation, then you set off the current year permissible capital expenditure on scientific research, and that way. This is the order which you use to set off business loss. The whole point is current year first, previous year later, and unabsorbed even later. Okay, that way. All right. Illustration 1. Mr. A, aged 35 years, submits the following particulars pertaining to AY 25-26. There's a salary income which is computed. When they say computed, okay, it means you do not give any standard deduction. It is already computed as per provisions of the Act. Section 16(1), 2, everything has been given there. Okay. Please don't draw on the screen. Okay. Loss from let out property. So there is a loss from income from house property head. There is a business loss of 1 lakh. If nothing is mentioned, assume regular business loss. Okay, if nothing is mentioned, you will obviously not go and assume it is speculation or it's specified business. It is a regular business loss. Okay, and then there's a bank interest. That means there is income from other sources. So, all right, the first option is he has shifted out of the default regime. So, under the old regime, you tell me what should be the computation of Mr. A under the old regime. Normal provisions. There's a salary income, 4 lakh. There is a house property loss. Can you set it off against salary income? Till 2 lakh you can. How much is the loss? 2.2 lakhs. How much will be set off? Under normal provisions, 2 lakh. You will write a note over here that we are setting off up to 2 lakhs because this is normal provision. Then you have a business loss. Can you set off against salary income? No, you can't set off. You give a note here also. That business loss is not eligible to be set off against salary head. Then you have an income from other sources, bank interest. What is the total income? GTI, what is the GTI? Are we missing something? So somebody very nicely calculated 2 lakh 80. Good, but we are missing something. We are missing the point that we have a business loss. And you are correct. Yes, you are correct that business loss cannot be set off against salary. But who has said it cannot be set off against income from other sources? This is current year business loss. It is not brought forward, right? You can set it off against income from other sources. So this should be set it off against income from other sources. And this should be nil. Don't blindly copy my solutions. I will keep tricking you. Okay. Because I want to see whether you miss it or not. So your note will be that out of 1 lakh of business loss, 80,000 we have used, 20K will be carried forward. And rest we have used. Okay, where has this gone? Salary income was 4. 2.2 loss. So this is the GTI. Okay, 2 lakhs. Okay. One more point. Okay. Let me just think hypothetically. Suppose this loss was not available to you and you had to include this 80,000 IFOS. Okay, this is savings bank interest, assume. Okay, because they've not given, they've given FD interest. If it was savings bank interest, assume if it was savings bank interest, then you have been asked to calculate TI, not GTI. Would you give deduction of 80 TTA? You would give deduction in the normal provisions. So assuming there was no business loss, assuming this was savings bank interest, and because you have to calculate total income under normal provisions, you would have given up to 10,000 of 80 TTA deduction. 10,000 deduction. Okay. This is not a part of your question. I'm just discussing. Because the question asks you TI, not GTI. So you think about deductions under Chapter 6A also. And yes, when you do the default regime, then those deductions are not available generally. Then you do not give it to them. Okay. All right. So now we do the second part of it. That is, what if you go under the default regime? So default regime, again, you have salary income of how much? You have 4 lakhs. You have income loss from house property. What do you do with it? loss from house property is not eligible for intersource set off in default regime. So you have a 2.2 lakhs of loss which you cannot set off against anything. It's a dead loss. No, it's not a dead loss. You can carry it forward. You mention a note that you can carry it forward, but you cannot use it. Even in the earlier case, you can mention a note that house property loss to the extent of 20,000 unabsorbed. You will carry it forward. This you will carry forward the balance. Just a second. Hello. Sorry. Ma'am, you are so pyari. You made it easy. Okay. Thank you. What I was saying is, even in the first case where you have used 2 lakhs of house property loss, you should mention a note that 20,000 you will carry forward and you will use it in the subsequent. No, in the 20,000 you will carry forward and use it. Okay, in the normal provisions you can carry forward. So you will mention that. Okay. And over here, when you cannot use the in loss from house property, no, ma'am, we cannot use in the default regime. Loss from house property is you cannot use it. Okay. It cannot even be carried forward. It cannot even be carried forward. In my last table, in the table that you have taken a photo of, you please make one change that in house property under the default regime, carry forward is not possible. Okay, under the default regime, carry forward is not possible of unutilized loss from house property. I'm going to share when I upload, I'm going to upload the final table only, so don't worry, but you all have taken a photograph. So that's why I'm saying that in that there was no specific row for default regime, so I could not mention it. But this is also relevant for you. In the default regime, carry forward of loss from house property is not possible. So here in the default regime, you will give a note that first, so we cannot use it. We cannot interhead set off. Second, we cannot even carry forward it. Okay. All right. Next, what do we have? Which other head of loss we have? We have business law. We have income from other sources. We have some bank interest. Okay, that we have of 80,000. Let me write in the inner column. 80,000. And then we have some business loss, which we cannot set off against salary income even in default regime, but we can set off against income from other source. So there is no such thing. So the GTI is and TI in this case are both equal to 4 lakhs. And there is a note that this loss lapses and that's it. Business loss, the balance business loss can be carried forward. Okay, 20,000 can be carried forward. And 4 lakhs of income, 20,000 of PGBP loss carry forward, and 0 loss of house property carry forward. Exactly. That is how you summarize it. Very good. That is what the full point is. Why is the screen changing? Are you all doing something with the screen? Okay, next sum. Please read the second question. But ma'am, in illustration 1 in study material in notes it. So I don't know which batch study material you are reading, but this is a change which has come recently. So if you have an old study material, maybe it is not updated. Okay, please you go and you download corrigendum or statutory update module from the ICAI BOS portal. There you will find the recent updates. So maybe because you have an old version, your book is not updated, perhaps it's very dangerous to use them. Or if you're using your old book, at least read it with the corrigendum to understand what changes have happened. Okay, because you are now doing Finance Act number 2 of 2024. So you have to follow that. Okay, question number 2. Mr. B, resident individual, furnishes following particulars. What is his total income if he pays tax under 115 BSc? So this question is default regime. Okay. So there is an income from salary. There is an income from. Oh. Somebody is hovering on the screen. Please don't do that. Yes, please don't fidget with the screen. Please don't try to fidget with the screen. Okay. All right. Salary. How much is the salary income? 45,000 computed. So you don't do anything more to it. Then there is a house property loss. Loss from house property under the default regime. What do you do? Is there any other income from house property you see? Because you can set it off intrahead, but there doesn't seem to be any other. So it is going to be lost 24. You can neither set off nor carry forward, and you give a note. Then there is an income, there is a loss from speculative business. Is there any income from speculative business? Please check. No, okay, there's a loss from non-speculative business. Okay, that means ordinary business. Ordinary business loss, fine, we may be able to use it. Speculative business income, then there is a profit from speculative business. If it's a profit, non-speculative business loss, can it be set off against speculative business income? Oh, that is also a loss. This is also a loss. Loss from speculative. So you can't do anything with it. You have to carry forward up to 4 years. Then there is a short-term capital loss of 25K, and there is a long-term capital gain. Can the short-term capital loss be set off against long-term capital gain? Short-term capital loss has small ego, na? It can be set off. Yes, it can be. So what is the unabsorbed short-term capital loss? 0.06, 6,000 basically. 6,000 to be carried forward to 8 assessment years and no net income. And so basically, and non-speculative business loss, you cannot set off against salary. So you put a note that I have no other income to set off. So I cannot do anything. So this will also be carried forward to 8 years. Okay. So basically, you have a total income, a GTI of 45,000, and you have carried forward losses of 22,000 from non-speculative business. You have 4,000 from speculative business, and you have 6,000 of short-term capital loss to be carried forward. Okay. And house property 0. Okay. All right. So hope everybody is on the same page. Is it too fast for you? Please read question 3. Please read question 3. Fatima. So there is an income from house property computed. There's an income from business before depreciation. There's a short-term capital gain, long-term capital loss, which is also brought forward. There's a business income. There's dividend income, which means IFOS. There is current year depreciation, and there is brought forward business loss. So you will get a chance to apply the order of set-off also over here, because the brought forward the business loss is incurred 6 years ago. So okay, it still has 2 more years of life. You can use it. Okay. All right. So how do we start? We first put the income from house property. Okay, income from house property 1,25,000. We do the income from business. So when we do PGBP, there we put profits before depreciation, because that's how the sum says. That's how the sum says, 1,35,000. We put it in the inner column because we are now going to adjust in the order of set off. Order given in the law is current year depreciation first. So please set off current year depreciation, 26,000. Then brought forward business loss next. Current year business loss they don't have. Brought forward business loss they have. 6 years old, which means 2 more years left. So it's okay. You can set off. How much? Fully you can set off because the profits are enough to absorb everything. What is the balance? How much is the business income? 64. Okay. Then there is a tea business also, na? There is a profit from tea business. How much is that? 48. How 48? Who can tell me? How 48? Who can tell me? We are talking about default. Question 3 is about which regime? Okay, it has not mentioned. But because there is no loss from house property, I think, and there is no mention of additional depreciation. So let it be assume shifted out of old regime. Assume shifted out of default regime. Assume shifted out of default regime. Okay, profit from tea business. How have we calculated 48,000? 40%, because 60% is by default exempt. Yes, 40% is treated as non-agriculture. It's a default rate for tea business. Rubber, it's a different percentage. Tea is a different percentage. Coffee is a different percentage. It's all given in the law. Yes. So tea cases, presumptive taxable income will be 40% of total profit. So which is 48,000 in this case. Total income from business is 1,12,000. Yes, only 40% is considered as business income. 60% is considered to be agricultural exempt income. Okay. Then we have some short-term capital gain also, na? We have some in the capital gain chapter head. We have some short-term capital gain. Try to bifurcate these in heads: income from others, house property, PGBP, capital gains. That may come one before or later. That is not a problem. But at least keep the sources in the respective head. It looks better in presentation. Capital gain is a positive profit of 56, so that's going to be taxable. And then there is an income from other sources also, which is dividend income. Dividend income taxable in the hands of the shareholders, so it's taxable. Okay. What is the GTI? 3,73,000. What are the carried forward losses? What are the carried forward losses? Any loss which has got waste? There is a long-term capital loss. There is a long-term capital loss which has to be still carried forward. It could not be used. Yes, other than that, everything is okay. So your note will be on the long-term capital loss. Please do not forget mentioning about unexpired losses. Okay, because till then your solution is not complete. Please do not forget mentioning about unabsorbed losses. If they are eligible to be carried forward, your solution is not complete till you give a note that this much amount has been carried forward. Okay? Not able to see the screen. Oh, are the others able to see the screen? Please minimize the screen. Is it okay now? Okay. Okay. Can you scroll down? Now everything is visible? Okay. Scrolling down not required, I think. Okay. All right. Okay. 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 So, chalo. Next question. Question number 4. Question number 4. Please read. Mr. Suhan submits following details. Calculate GTI and loss to be carried forward. Assuming he has shifted out of default regime. So he's in the old regime. There is detail of income from salary, loss from house property, income from business, loss from another business, short-term loss, long-term gain, dividend, lottery winning, card gaming, agricultural income, short-term capital loss, bank interest. Very good. So lots of sources. Very nice sum. Yes. But we will try to classify them in the respective heads. Ma'am, one clarification. Dividend received is paid after taxed on profits in company. So it is double taxation. Yes, you have asked such a controversial question that there are case laws challenging the constitutional right to tax dividend in the hands of the company once as tax on profits, and in the hands of the shareholders once as tax on distributed profits. So, yes, I would not like to answer if it is double taxation or not, because that is a legal question which courts are addressing. But whether it is taxable in both hands, the answer is yes. Okay. You see it in a way that it's taxable in the hands of two different people. Okay. So at least it's not double in the hands of one person. Okay. All right. Oh, okay. Let's start. Salary income. 3 lakh. Then we consider income from house property head. Huh? Over there we have a loss. 40,000. This person is in the old regime. How much can we set off? Again, salaries. Up to 2 lakhs. How much is the loss? 40,000. So you can obviously fully set off. Okay. Then there is a PGBP. Then there is a PGBP. Why is my screen appearing like this to you? Let me reshare the screen. Huh? Because my screen is appearing weirdly to you. Yeah, now it's okay. Okay, PGBP. PGBP, income from sugar business. So there is a profit from sugar business and there's loss from iron ore business. These two are not specified or speculative businesses. They are just two different sources of business under the head PGBP, which are normal businesses, and you can set off. And somebody is scrolling the screen. Okay. So income you can set off, no? Which means you can set off. So there is a PGBP from sugar. Sugar, how much is it? 50,000. And you have a brought forward iron ore business loss of how much from previous year 1920 means assessment year 2021. 8 years available. Abhi tak it is not expired fully. It is of 1,20,000, but you can use only up to 50,000. Okay, and you give a note that there is a balance also to carry forward. There is a 70,000 carry forward up to 8 years from the year in which it arose. Then any other business income? You have agricultural income. Okay. You don't have any other business income. Okay. Agricultural income is anyway exempt. So then we come to capital gains head. Capital gains head, short-term capital loss and long-term capital gain. So short-term capital loss can be set off against long-term capital gain, but to the extent of the gain is 40,000. So only up to 40,000 you can set off. 20,000 you will carry forward. You will give a note. Okay. Then we come to income from other sources. Income from other sources. Here you have dividend income. It is fully taxable. How much is it? 5,000. Then you have winning from lottery, taxable. How much? 50,000. Then you have card game. 6,000. Then you have FD interest. 5,000. You have another short-term capital loss of 10,000. So that also you could not use. So basically short-term capital loss 10 plus 20, 30K you are going to carry forward. Iron ore loss can be set off against FD and dividend. But sir, if it were of the current year, it could have been done. But it is a brought forward. Brought forward losses cannot be set off interhead generally. Clear? So how much is the income from other sources? 556.5 taken together is 66,000. And the GTI we have, how much is the GTI? Somebody tell me, please. How much is the GTI? 3,26,000. Okay. And what are the losses to be carried forward? We have a capital loss of 20,000 plus 10,000, 111A. So there is a total capital loss of 30,000. to be carried forward. And there is a iron ore business unabsorbed loss of 70,000 to be carried forward. Okay. So 3,26,000 GTI, unabsorbed business loss of 70,000, unabsorbed short-term capital loss of 30,000. Is it okay for all? Screen visible? Entire screen visible? I am currently showing my entire screen. Is it visible? Okay. Okay. All right. Perfect. Agricultural income is anyway exempt, so you give a note about that, that it is exempt, and therefore we have not included in the scope of things. Note on agri income. Ma'am, STCL 111A adjust with LTCG? Yes. No problem. Short-term loss has short ego. It can be adjusted. Even 111A can be adjusted. In fact, there is no need to see 111A through a different lens. It was always taxable. Only the rate is different. LTCL under 112A, somebody can see from a different lens because it is not taxable up to 1,25,000. But STCL was always, I mean, STCG 111A was always taxable. That's not a problem. Can we adjust business loss with IFOS? If it was current year business loss, you could have done, Nayan, but because it is brought forward, you cannot. Okay. Ma'am, iron ore is specified business. 70,000 was lost from some normal business, could be adjusted. Who said it's specified business? Who said it's specified business? Is it referred in 35 AD? Please, iron ore is a normal business loss. It's just that sugar business and iron ore businesses are two different sources of business under the head PGBP, but they are not speculative or specified. They are regular. That's why we are setting them off. That is why we are marrying them with each other. Na? And the reason for not adjusting with IFOS is not because it is specified, but because it is brought forward and interhead is not possible. For agricultural income is other clubbing income calculation with add and individual agricultural income with basic exemption to be done. You mean the partial aggregation in case of yes. So when you do the calculation of tax liability, you need to consider the agricultural income the way it is calculated, partial aggregation, whatever the way it is done. That is a separate thing. But here we are only calculating the income, not the tax. Okay. Understood? Question number 5. Everybody please read. Mr. Batra. This person has short-term capital gain, loss from speculative business, long-term capital gain, long-term capital loss, income from textile business after allowing current year depreciation, income from OMRH, income from salary, loss from house property, and he has some brought forward loss from OMRH, textile business. Assessment year 17, 18, so 8 years have not lapsed. Assessment year, but this is the 8th year. And assessment year 22, 23 of OMRH, 4 years have not lapsed. Okay, all right. Let's start head by head. Firstly, we start with salaries. How much is the salary income? Is agricultural income integration calculation done for sugar and tea income also? That is done for tax, not for income. Integration calculation. It's not about sugar, tea, rubber. It's about if you have a composite income, How do you calculate tax? And details you will find in the agricultural income chapter, because it's a very specific thing that we cannot cover now. Ma'am, brought forward loss of business cannot be set off against any other head except PGBP. Am I correct, ma'am? Yes, you're correct. Okay. So salary income, please write. How much is it? 1 lakh. And there is some current year. Which regime is he? Illustration 5. He is shifting out of old regime, so of default regime. So he is in the old regime. Okay. So now he has loss from house property. So we can set off up to 2 lakhs. Everybody aligned with me? You can set off up to 2 lakhs. PGBP, please write. What are the sources? You have some textile business income, textile business gain. How much do you have? You have 50,000. And you have some old loss, brought forward textile business loss. This is to base very good. It is to Intrahead and same source also. Textile business kai loss hai, very nice. So this though there is no restriction. Parents are absolutely happy to marry this loss. So, but how much? To the extent of 50 only, to the extent you have profits. So balance will what will happen to the balance? There is a how much of loss is there? The losses of 60,000. So 10,000 has to be. Can it be carried forward or can it be not? 10,000 is unabsorbed textile business loss. Can it be carried forward or can it be not? Who will answer? Ma'am, if HP loss greater than 2 lakhs, then up to 2 lakhs. Yes. No, somebody is giving me the total answer. My question now is that you have 10,000 of unabsorbed business loss. Can it be carried forward or can it be not? Carry forward allowed. Yes, it is the 8th year. So you cannot carry forward it anymore. Okay, no more carry forward is the answer. You could have carry forward if the time was remaining, but it has reached its last year of life. Okay, no more life left. So no more carry forward. Okay. Now, next head of income is your OMRH. I mean, it's not a head, but okay, it's a separate category. OMRH, you have a profit. How much is the profit? You have 15,000 of profit. And how much is the loss from earlier year that you have, which can only be set off against profit from OMRH? So the loss is of 25,000, but you can only set off 15. And the remaining 10K, you can carry forward to AY 26, 27 because 4 years have not yet lapsed. So carry forward allowed. Okay. Then we come to capital gains. Short-term capital gain, 1,40,000. Long-term capital gain, 30,000. Is there some long-term loss? There is a long-term loss. You can use to the extent of long-term gain only. Long-term loss has long ego, cannot be set off against short-term capital gain. So what to do with the balance? Balance 70,000 loss. See if the life is left. Yes, life is left. So you can carry forward to assessment year 26 and 27. Okay. So overall, when we see the income, $60,000, 1,40,000. Overall income is 2 lakhs. And losses to be carried forward, overall is 10,000 you cannot carry forward business loss, 10,000 of OMRH you can carry forward, and 70,000 of LTCL you can carry forward. Okay. Is there any other loss in the sum? There is a loss from speculative business that you can't do anything. You have to carry forward because you do not have speculative business income. So you give a note about that. That loss from speculative business you need to carry forward. So there is, if you make another column for only the losses to be carried forward, then you will find that you have a regular business loss where you say time expired. You have OMRH where you say 10,000. You have short LTCL of 70,000, and you have specified business loss of 60,000. Are we all on the same page? Loss from gambling can be set off or carry forward? No, you cannot. Okay, it is covered in the casual income in my chart. Okay, can you all see my complete screen? No. Okay, wait. Okay. Anyway, you've taken notes now. You have written down. Casual income cannot be set off under any other head. No, cannot be. Carry forward 1,40,000. Don't sum total the carry forward losses. Okay. It is like you have 4 oranges and 5 apples in your basket. And if I ask you how many do you have, you say I have 9. No, they are different in nature. You cannot sum total the carry forward losses. Whenever you give an answer about carry forward losses, 1,40,000 makes no kind of sense. The only sense it makes is 10,000 of OMRH loss, 70,000 of LTCL, and 60,000 of speculative business loss. Okay. Do not total apples and oranges. They are different things. Okay. All right. Question number 6. Question number 6. This is slightly different. It's a presumptive taxation scheme. You all have done presumptive taxation. Have you done business income chapter? Ma'am, when we count device for carry forward time, do we include the financial year in which we incur loss or start from the next year? You start from the assessment year. The limit is 8 years from the assessment year in which the loss arose. So, like for example, in the last sum, we were dealing with assessment year 17-18. So that year, the loss arose. So you take 18-19, 19-20, 20-21, 21-22, 22-23, 23-24, 25, 26, 26, 27. So this year, your relevant year, assessment year 26-27, is the last year of its life. You use it or you waste it. It cannot go to further year. Okay, sorry, 25 assessment year 25-26. So if assessment year 17-18, so we have to 17-18, 8 years we need to see. So 17 assess 2017 plus 8 is 2025. So assessment year 25-26 is the last year of its life. You cannot carry it forward to assessment year 26-27. Yes, ma'am, we have studied 44AE, 44ADA, 44AD. Okay. Under PGBP head, we can go for presumptive taxation. Yes, yes. But you have studied now, so then you will be able to understand this sum. Okay. Please read question number 6. Where are we? 450. Okay. So Mr. A furnishes you the following information: income from plying of vehicles. He owned 5 light goods vehicles, and income from retail trade of garments as per books with sales turnover given to you. He had declared income of presumptive basis under 44 AD for first time in assessment at 25-26. Assume 10% of turnover during previous year 24-25 was received in cash and balanced through account pay check, and all the payments in respect of expenditure were also made through account pay check or credit or debit card. And he has brought forward depreciation, that means unabsorbed depreciation relating to assessment year 23-24. Does this year matter here? No, because it is unabsorbed depreciation has indefinite life. Unabsorbed depreciation has indefinite life. So income from retail trade. How will you calculate income from retail trade? Presumptive scheme 44 AD. Because the turnover condition, the things are conditions are met. That is 10% turnover was received in cash. 10% turnover was received in cash. So it is more than the limit which was allowed. So presumptive taxation scheme on income would be 8% of turnover. 8% of turnover received in cash. It will be 8% of the amount which was received in cash. How much was received in cash? 1 crore 35 lakh 70,000. 10% was received in cash. So 8% of the turnover received in cash is how much? And 6% of the turnover received by check is how much? Please zoom out, screen is not visible. How do I zoom out? I mean, it is zoomed out with me, but you all are seeing it in a zoom in way. 8% है, 6% ये सब 44 AD में लिखा है, इसलिए मैंने पहले पूछा कि 8% आपने क्या 44 AD पढ़ा है, उनमें ये रेट्स प्रिस्क्राइब है. 1 crore 35 lakh 70,000 is the sales turnover given in the question, and they have said 10% of that is cash and balance is check. So 10% of that cash turnover के ऊपर 8% और check turnover पे 6% लगाया गया है presumptive business income for 44 AD, and that is coming to 841,430. 841,340. A presumptive income is now compared with the books income. Books income is 7.5 lakhs. Income as per books. This is income as per 44 AD. If my screen is too zoomed in, I mean, I don't know what to. Just follow what I say if you can't see the whole screen at once. Income from retail trade as per 44 AD is 8% of cash turnover and 6% of non-cash turnover. It is 10%, 5%. 10% is more than 5%, so cannot follow 44 AD. Why are you all putting those questions? Firstly, my screen is not entirely visible to you. You can use other drawing tools. Okay, I'm going to show you an Excel sheet. I'm closing this whiteboard. Okay, somehow there is a gap. Okay, and this question pertaining to 44 AD and 44 AE, I'm going to upload the solution. Okay, because we are running out of time. We are already at 5 and I have many sums to close. So because this is pertaining to very specific nuances of presumptive tax scheme, I'm going to upload it on the thing. If you have already studied the chapter, you'll be able to understand. If you have not, then once you study, then you go and read it. Okay, and I'm closing this whiteboard because I'm sorry, somehow there is a zoom in, zoom out issue. I'm opening an Excel sheet for you. Okay. Okay, please so consider question number 6 as your homework. Solution will be uploaded. Consider question number 7 also as your homework. It is very similar to the sum that we have just solved. Only the nuance is that there is a speculative business A and B. So there are two sources from speculative business, and you know inter-source set-off is possible within speculative business. Okay. Other than that, things you have already done. So you should be able to apply. Question number 7 is also homework. Question number 8 is very small and easy. It is homework. Question number 9 we can do now. We are doing now. Question number 9. So please come to question number 9. Can you see my screen? Huh? Now at least the screen is visible. Srivatsan? Yes, Srivatsan. 6, 7, 8 homework. 9 we are doing. Okay. So Srivatsan is 57 years of age. He has income from salary, house property, cloth business, speculation business, specified business, long-term capital gain from sale of land, loss from card game, income from betting, and LIP, life insurance premium. Okay. So let's first start with income from salaries. It's a computed thing given, so we are not putting any standard deduction. This person is opting out of default regime, so it's an old regime. Okay, it's an old regime. Ma'am, can you provide answer for all the questions? Yeah, I will provide answer for all the questions. Why do you worry so much? Old regime. Hmm? So income from salaries you have taken. Now there is a loss from house property. In the old regime, you can set off up to 2 lakhs, and he has only 1 lakh 90, so you can set off. The balance remains 30,000. Then you have loss from cloth business, and you have income from speculation business and loss from specified business. So business heads, you have this much. Now speculation business income is okay, you plot it. If you have loss from a regular business and income from a speculation business, can you set it off? Can you set off loss from a regular business with income from a speculation business? No. Why? Why no? Why no? How did we understand orthodox? How did we understand orthodox? Orthodox loss cannot be set off against liberal gain, but liberal loss can be set off against orthodox gain. Regular business loss can be set off against speculative business gain. Yes, yes. So we can set off. Okay. So once you've set off, then there is no issue, nothing, no note to be given. Then loss from specified business. So because you have no income from specified business, it has to be carried forward. So you have to give that as a note. That loss from specified business has to be given as a note. And loss from cloth business, to the extent you've not been able to use it, 2,10,000, you have to carry forward that also. So you have to give a note. Okay. So there will be loss from cloth business, 2,10,000. So let us wait. Let maybe you will be able to use it because it's only current year loss. And loss from specified business, at least you can't use that, you have put in carry forward. Okay. Now we come to capital gains. So there is a long-term capital gains from sale of land, 2,50,000, and there is a long-term, there is no other capital loss. But if you have business loss, you can set off against capital gain. Orthodox loss cannot be set off against liberal gain, but liberal loss can be set off against orthodox gain. Okay. Income of specified business can be used to set off loss from regular business. Similarly, loss from business can be set off against capital gain. So you have set off loss from business against capital gain. Okay, so 10,10,000 was remaining after first set off. You have set off the balance also over here, and the rest capital gain you will have to pay tax on. But what will be the order of set off? When you set off your business loss, first you set off against the same head, then you set off against a different head. And if it was salaries, you could not have set off. Okay, so like you have income from salaries over here. If suppose you had some unabsorbed business loss left even after setting off against income from business and income from capital gains, still you could not have set off against income from salary because business loss and salary not allowed. Okay. All right. So everybody on this capital gains, till that you've understood? Capital gains you've understood? Okay. Now income from betting. There is an income from betting and there is a loss from card game. Acha. Now what do you do? There is an income from betting and a loss from card game. This you cannot even do intersource set off. Income from betting will be taxable, but loss from card game will be lost. Okay, loss from card game will be lost. Loss from card game will be lost. Dead loss. Yes. Then there is in the question, there's a question reference of LIP, life insurance premium. That is perhaps from chapter 6A perspective because this question deals with old regime. If it were default regime, then chapter 6A, these ATC would also not be relevant. But because it is old regime, we are talking about ATC. So once we have calculated GTI, we will do an ATC deduction. ATC reduction allowed up to, this much is only 10% of the capital sum assured. 10% of the capital sum assured is 45,000. 10% of the capital sum assured is 45,000. So have you all done chapter 6A already? No. Then it is a little trouble. Then it's a little problematic. Because if you have not done, then you may not be able to fully appreciate what has happened here. So for the time being, you just remember this. And when you do chapter 6A, you will be able to fully understand. Okay. See, GTI has to be reduced by the LTCG and casual income. That is okay because somebody also said in the class that LTCG, you cannot, you'll have to pay tax on that. You cannot offset it by deductions or even by slab. Okay. So when you're calculating GTI and when you're calculating Chapter 6A deduction, GTI has to be reduced by the amount of LTCG and casual income. That means casual income means this income from betting in this case. Okay. So deduction in respect of life insurance premium of 45,000 has to be limited to 30,000 because you have how much after all kinds of set off? After all kinds of set off, we had LTCG of 40,000 and we have casual income of 45,000. So to the extent of 85,000 at least, you could not have used deductions. When you study deductions under Chapter 6A, you will get this point. So to the extent of these two types of specific income, long-term capital gain and income from betting or casual income, you could not have used deductions under Chapter 6A. Therefore, to that extent, we will not use our ATC and 85,000. In other words, those income will still be included in total income. So 40 plus 45, 85,000 will still be included in the total income. You will limit your ATC or Chapter 6 reduction in a way that those income will still remain included in total income. Okay, you'll understand it better when you do Chapter 6. If you do not understand completely, do not bother. This solution note will remain with you. When you have done that chapter, you'll be able to understand this. Okay. All right. So everybody has understood the total income calculation and the losses to be carried forward. Cloth business loss completely used. One for specified business and one for this thing, capital gain. And loss from specified business you could not use. So, sorry, speculation business. Loss from specified business you could not use. That you have to carry forward. Okay. All right. Question 9 is also done then. Question 10 has a lot of things. House property 1, 2. Question 11 has a lot of things. And we have 20 minutes. Question 10. Let's do question 10. Let's do question 10. Question 11 is homework for you. Let's do question 10. Mr. Rajat. He has two let out house property. House property 1, income after all deduction 72,000. House property 2, current year losses 30,000. Can you set off these two sources, two houses? That means two sources under the same head. It's a case of two sources intra-head. You can set off. Okay, even if it is default regime or whatever regime, this one you can set off. So, but this is a case of default regime. Okay. So this you have set off, fine. Next we come to the next category, which is businesses. Textile business discontinued. So current year you have a loss and you have brought forward loss of earlier year. Brought forward is of 2020-21. If I apply 8 years, so it can go up to assessment year 28-29, which means current year I can use what I cannot use, I will carry forward. Okay. So fine, I will use textile. Then I have chemical business. So textile business, chemical business, leather business, they are all okay. I mean, they are all different sources, regular business only. They are not specified or speculative business. So chemical business also discontinued, but it was discontinued way back. So current year, no item, nothing. There is a bad debt allowed in earlier years, which is recovered during this year. Bad debt recovery is taxable as business income. Is it correct? Which section? If anybody can tell me. No, no. 40AI is about deductions. I'm talking about recovery. 29 is also about deductions. So either you say 28, chargeability section, or you say 41, deemed income section. But why are you giving me expense sections? 36 is also expense section. I am talking about bad debt recovery. Yes, section 40, 41. I'm not talking about bad debt. I'm talking about bad debt recovery. Bad debt happened in earlier year. You have now got the recovery back. Section 41. So income under PGBP, you either deal with under section 28, which is the chargeability section, or you deal under section 41, which is the deemed income section. Okay. All right. Okay. So bad debt will be taxable in the current year as current year business profit, deemed income. Okay. Then you have brought forward business loss of AY 21-22. 21-22, 8 years means 29, 29-30. So fine, this is also okay. All right. Leather business profit for the current year. There is a profit. Okay. Then there is a share of profit in a firm in which he's a partner. Share of profit in a firm in which he's a partner. Which head of income does anything from a partnership firm fall? You are talking about the limits on deductions. But which head of income will profits from partnership firm fall? PGPP, correct. So we are dealing with this is relevant now because we interhead, intersource. We have to first be sure of which head we are talking about. Then only we'll apply those principles, right? So this is also business income. All right. So you have a share of profit, but share of profit in partnership firm, is it taxable or is it exempt? It is exempt. Tax is paid by the firm and it is exempt in the hands of the partners. Very good. So share of profit in that partnership firm is there, but it's exempt. So you ignore it. Now you consider the rest of the businesses. Textile business, you have current year loss, brought forward loss, both losses. Okay. Then chemical business, you have no profit, no loss, and you have bad debt recovery means current year income. 35,000 of income you have, and you have a brought forward loss. Okay. So it's 35,000 of income. And from leather business, you have 1 lakh of income. So total income that you have from business is 1,35,000. Now, what will you use first? In the order of set off, current year loss has to be used first. It's not that textile ko leather se liya, leather textile will match like that. We will match as per the rules given to us. That is current year first, previous year next, unabsorbed further next. We will use this order of set off. Okay. So current year business loss you have in respect of textile. So textile 40,000 current year you will use, and brought forward business loss you have of textile also and chemical also. Which one you want to use? You should ideally use the one which will expire first, because there is no rule laid down in this respect that in brought forward losses how to prioritize. So you will use what is more beneficial to you. That means you will use the loss which will expire first. In this case, loss of AY 2021 will expire before AY 21-22, and therefore we will use AY 2021's textile business brought forward loss first. Okay. Is it okay? Thereafter, whatever remains out of textile business, chemical business, those losses will be carried forward. Okay. Then we have short-term capital gain and long-term capital loss. Long-term capital loss we know will not be set off. So short-term capital gain will go into the income part and long-term capital loss will go into the carry forward part. Okay. So gross total income we have calculated. Chapter 6 we cannot do at least 80C because there is a detail about contribution to LIC towards premium. But 80C is not applicable in default regime. Therefore, we are not doing that. And we have arrived at the total income. When it comes to the losses to be carried forward, please remember in this question, generally questions end with GTI, TI. Okay, but this kind of question ends after you have also given a table about the losses to be carried forward. Okay, and in this case, the unabsorbed losses are of chemical business, AY 21-22, the entire 50,000, and long-term capital loss of 35,000. Are we all on the same page? Please give a note that why you have not considered share of profit from firm. Say that it is exempt from tax. Okay. All right. Question 11 I have told you is a homework for you. So please read question number 12. Mr. P. Actually, question number 12 also you can do for homework because it's nothing great. It's simple. When you do for homework, you'll understand that it is similar to what we have already done. So you can read question number 13. So there is in question number 13, there is Mr. Prakhar. There's income from house property. Yes, ma'am, कर लेंगे question 12. पता था मुझे आप कर देंगे, इसलिए मैंने homework में दे दिया. Okay, Mr. Prakhar, question number 13. He has income from house property and he's shifting out of default regime. Huh? So old provisions. He has income from house property, which is computed, so you don't give further reductions. He has short-term capital loss on shares. He has long-term capital gain on sale of agricultural land. So short-term loss, short ego, adjustment possible with long-term. Okay. He has income from rubber business. Rubber money, there is some element of agriculture. What is the percentage involved? Who will tell me how much of what percentage of rubber business is deemed to be business income? 35 is deemed to be business income and 65 is deemed to be agricultural income. Okay. So to the extent of 35%, which is business income only, we are concerned. Then there is a loss from garment business, which was discontinued in financial year 1920, means assessment year 2021, means loss can be continued up to 28-29. Okay. Then you have a loss from betting. Nobody can do anything about it. And you have an income from lotteries. You have to pay tax on. Okay. So this was also easy, but nonetheless, income from house property, you've already put. Income from rubber business, just take 35% of 80,000, which is 28,000. Then you have a brought forward loss. Please use it to the extent of 28,000 and the balance. That means 70,000 minus 28,000. The balance will be carried forward. Okay. So you may ask, ma'am, business to khatam ho gaya, business was discontinued. How can we carry forward the losses? So I will tell you that the law places restriction on the owner. That means the person who incurred the loss should only be able to set it off, carry forward and set it off, except in case of succession by inheritance. But they do not prohibit you to carry forward loss of a business which you have discontinued. Okay, that's why in these questions you see discontinued business, you feel a doubt in your mind that, oh my god, business doesn't exist. How can we carry its legacy of losses forward? So the continuity should be seen in terms of the assessee, the one who incurred the loss and is the one who was also claiming the loss, not in terms of the business from which the loss was incurred. Is it okay? I didn't get the IFOS point. Let me come to the IFOS point. Co-owner it will be seen. Yes. Okay. So income from business and you have brought forward loss from even discontinued business. You have set it off. Balance you will carry forward. Okay. Capital gain to the extent of capital loss you can set it off. And short-term capital loss you can set off against long-term capital gain completely. Then there will be some unabsorbed short-term capital loss which you will carry forward up to 8 years. Now, when it comes to income from other sources, you have some positive income from lottery which you will put to tax. Okay. and your loss from betting will go waste. Okay. Now somebody asked me, I didn't understand IFOS point. That ma'am, in the question says income from lotteries net 5460. Income from lotteries net 5460. What do you mean by that? See, in case of income from lotteries, what happens is, sorry, somebody is asking about land. So actually in the sum we have assumed agricultural land to be rural agricultural land, and therefore we have considered it to be exempt. If we had assumed it to be urban agricultural land, then we would have used the set off. You can assume urban. You mentioned that then. You can assume urban. But agricultural, more likely to assume rural. You can assume urban, there is no problem. But if you assume rural agricultural land, then capital gain is exempt. And the entire short-term capital loss is eligible to be carried forward and set off. Yeah, you can assume. Yes. Please mention and then assume. Acha, now coming back to IFOS, somebody was asking me what happened here. So actually, income from lottery is subject to a TDS of 30%. Okay, there is a 30% TDS. So suppose it's about KBC. Suppose we see KBC. When they say prize money, you've got prize money of so and so. So they, even if one person wins 1 crore rupees, 30% is going to be withheld at source, and he's going to get only 70 lakhs. Okay, 30 lakhs will be withheld as tax on source as TDS on the winning, and 70 lakhs will be given to the assessee. So in this question, when they say income from lottery net, they meant to refer to the 70 lakhs which they've got in cash, which they've got in hand. Okay, that net amount that I've got is this much. But what is your income? Actually, your income is 1 crore. 30% has been deducted as tax, but it is a TDS. Doesn't mean that it is not your income. Your income is 1 crore. 30% was not paid to you because it was withheld as TDS, and balance 70 lakhs was paid to you. So you may see 70 lakhs as net income, but actually 1 crore is your gross taxable income and 30 lakhs is tax thereon. Okay. Therefore, when the question says income from lottery net, then that means it is net of 30%. You need to gross it up. How did we arrive at 1 crore from 70 lakhs? What formula we applied? We did 70 lakhs. We did 70 lakhs by 7 into 10. How did we get 7? 7 was actually 10 minus 3. Okay, in other words, we did 70 by 70% to do gross up. We did 70 by 70%. If 70 lakhs represents 70%, then what would be 100%? It is simple unitary method. If 70 lakhs represents 70% of the total, then what would be 100%? It would be 1 crore. Similar is here. 5460 represents 70%, then what would be 100%? It would be 7800. Is it okay? Is it okay, everybody? This was the only catch in this sum. Otherwise, it was, there were 2 catches actually. Long-term capital gain on sale of agricultural land. You need to give a note to treat it as exempt or taxable. And the other note was on grossing up. This was the only catch. Otherwise, it's a simple sum only. Understood. Okay. And losses to be carried forward statement also you will make. So you have carried forward the short-term capital loss, you will mention the garment business, whatever you could not absorb, you will mention, and the loss from betting, which you cannot do anything about, you will mention. It can neither be set off nor can be carried forward. Okay. Come to the next question, question number 14. So you all are seeing now how fast we are able to solve the questions. And somebody, by the way, asked me that what if I assume it is an urban land? So you can assume if it is an urban land, the answer will change, and this is the answer. The only thing that will change is you will be able to set off the short-term capital loss. C. You will be able to set off the short-term capital loss. Because you have treated the capital gain as taxable. And consequently, the amount of short-term capital loss to be carried forward will reduce by that amount. That is the only change which will happen in your solution if you assume the land to be urban land. Okay. All right. But you don't need to, in the exam for 4 marks, give 2 types of solutions. Please just make one assumption and solve in that way. Okay. If you waste time like this, then it will be very difficult. Okay. Okay. Next. Question number 14, please read. Harsh. Harsh furnishes following details: compute total income, show income eligible for carry forward, assume he shifts out of old default regime. So he is in the old regime. Salary received. These are all questions which have been asked in the previous terms. Okay, they are coming for 4 marks. So these are they are like grabs. It is like, you go to a mall to buy something and then you are standing in the billing queue and there are items placed of, and picks under 99 rupees. That in the billing queue where you already decided what you wanted to buy and you already filled your cart, and now they are luring you by saying, by these are small items, please add them to your cart also while you stand in the billing queue. So this clubbing and set of carry forward questions are like that. They are very simple for 4-6 marks. Just a little bit of effort and you'll be able to grab them like quick picks under rupees 99. Okay. So Harsh has some salary from partnership. Salary is going to be taxable in his hands, but under which head? Salary income or PGBP? Salary from partnership firm is taxable in which head? PGBP. Again, 40B. 40B is about allowability to the firm. Deduction. 40B is a deduction section. Okay. Here we are talking about the recipient who has got this. Okay. Loss on sale of shares listed in stock exchange held for 18 months and STT paid on sale and acquisition. And then say STT is paid, so it is, I think it is a 111A kind of stuff. 18 months means more than 12 months. So 112A. Okay. Okay. And long-term capital gain on sale of land. There is a brought forward business loss of assessment year 17-18. Assessment year 17-18 means you have life till assessment year 25-26. Oh, this is the last year. Did you use it or you waste it? Okay, this is the last year. All right. Loss of specified business covered in section 35 AD. So you do something now. For you, assessment year is always 25-26. You mark it in your head that assessment year 17-18. If you have any question saying assessment year 17-18 से आ रहा है लॉस या उससे भी पहले से आ रहा है तो उससे पहले से आ रहा है तो don't even use it. And assessment year 17-18 से आ रहा है तो you use it in this year and say it cannot be carried forward further. Okay, you don't need to calculate in the exam. Your assessment year is fixed. So you now know that beyond which if you get a loss, but yes, this I'm talking about the cases where 8 years is applicable. Cases where 4 years is applicable, you calculate which assessment year onwards up to which assessment year you will consider and which assessment year you will not. Okay, so for 8 years category, assessment year 17-18 has the last chance in your assessment year, beyond which you either use it or you waste it. You cannot carry it forward. Okay, and for the 4 years case, it's going to be assessment year 2021's 4 years is assessment year 21-22. Uska 4 years will lapse in this year. 4th year will be this assessment year 21-22. Okay. So assessment year 17-18 is your 8 years benchmark, and assessment year 21-22 is your 4 years benchmark. That if you get losses from that year, this is the last year you will use, and thereafter you will lapse. Okay. Then loss of specified business in 35 AD and loss from house property. Income from betting gross. If they've said gross, then you don't do that TDS calculation. Okay. And then they have loss from card games. Very good. So it's actually a simple sum, but fine. Let's do it. So there is no head of salary income here. You have, so let's start with PGBP income then. You have salary income from partnership firm that is taxable. You assume that the same was fully allowed to the firm, means it is fully taxable in the hands of the partner. So you put that. Then you have brought forward business loss, and you have loss of current year specified business. Current year specified business you cannot use. Okay. And so if you can't use current year specified business loss, then you look for other losses. Long-term capital loss you cannot use. Loss from card games you cannot use. Loss from house property, yes, this you can use. So you use loss from house property, and this is old regime, so you will use up to 2 lakhs. Okay, if it was default regime, you would have not used it all. Okay, so you use loss from house property, and you use brought forward loss, since this is the last year, and you use whatever you can, and thereafter you waste it. Okay, so entire thing got consumed. Very good. Then you go to capital gains head. There you will find there's a long-term capital gain, there is a long-term capital loss. Okay, so you will set them off. All right, and there is an unabsorbed long-term capital loss of 1 lakh that you will carry forward. Okay, up to 8 assessment years. Then you go to income from other sources. There is an income from betting, you will put to tax. There is a loss from card game, which you can't do anything about. It is going to lapse. You can neither set off nor carry forward. Okay, and that's it. So that has also come. So you got your total income and losses to be carried forward. There was only up to 2 lakhs of loss from house property you could set off. So balance 50,000 you need to carry forward. Had it been default regime, how much of loss from house property you would carry forward? If it was default regime, how much loss from house property would you carry forward? 0. Correct. But this is old regime, so you will carry forward the balance loss, and you will set off against income from house property in the subsequent years. Okay. And thereafter, what other loss? Loss from specified business you could not use, that you will carry forward. Long-term capital gains loss on listed shares, 1 lakh to that extent you could not use, that you will carry forward. Okay. This sum is also clear to everybody. If it is clear, please go to illustration 15. Question number 15. Mr. X. If you are getting, see, we have 3 questions in our hand, 15, 16, 17. If you are getting late, you can drop the class. Okay, you can go on a break, you do what you want to. All right. But if you are able to attend for a little longer, then you please stay. Okay. In any case, I'm not saying I'm not blackmailing you, or I'm not saying in any other way. I'm just saying that all the illustrations, all the solutions will be uploaded along with the cheat sheet. Okay. So if you, for any reason you want to move out, you can move out. Don't worry. If you can stay, then please stay. There are only 3 more questions left. And you have seen the speed with which they are getting solved. Okay. So question number 15. There's a basic salary, there's a DA. Oh my god, this is a salary sum. So many things. No, it's a salary. Then there is a gift, minor son on birthday from friend. Then there is a gift. It's a clubbing and set off combination. Wow. It's a very nice sum. If you can stay back, please do. There's some clubbing also here. And there is set off also here. And there is chapter 6A also here. Okay, wow, very nice. So there's some salary calculation, there's some clubbing, there is some set off, and there's some chapter 6A. Okay, let us start. Firstly, you put calculate the income from salary. So there is a basic salary and there is a DA. DA, the entire thing is going to be part of the calculation. Then DA forming part will be treated separately for any other calculation. Okay. After that, you have employer's contribution to NPS, because pension scheme referred to in 80 CCD is actually NPS. So both of them contribute 20% of basic to the pension scheme. So just calculate 20% of basic. Employee's contribution does not form part of taxable income. Employer's contribution does. So we are only calculating employer. Okay. Thereafter, you will do a standard deduction because this person has opted out of default regime. So standard deduction is 50,000. If he was opting for default regime, then the standard deduction would be 75,000. We are all on this page. Okay. So after doing this, we have calculated income from salaries. I hope you have reached this because it was fairly easy. And once you have done, please give me a go ahead. We'll start with PGBP. Okay. So PGBP में क्या हुआ है कि Mr. X in very old year gifted a sum of 6 lakhs to Mrs. X, and she started a business by introducing such amount as her capital. तो पुराने साल में Mr. X had given a gift to Mrs. X and she started doing her business. Now you know that capital contribution we need to see as on 1st April 24. We have done clubbing chapter, right? 1st April 24 ko her total investment in business was 10 lakhs. Okay, and husband's contribution is 6 lakhs. And loss in this year is this much. Now you tell me how much loss will pertain to husband and how much loss will pertain to wife, and whether you can club losses also is also a point that this point is trying to address. Okay, so let's see. So proportionate share you will have to calculate as on 1st April. The 1st April the contribution by husband is 6 and the contribution by and total investment is 10, which means 4 lakhs is her own money and 6 lakhs has come from husband. Okay, so in 6:4 ratio she has to do the clubbing. So Mr. X has to take 1,30,000 ka 6/10 share of the loss. Are you with me on this? Mr. X has, because loss also is clubbed, not only income. We did in the last class. Clubbing applies not only to profit but also to loss. So 1,30,000 loss ka 60%, 6 out of 10 belongs to Mr. X's contribution. And this loss should also be gifted to him. Ki bhai, you take it. If it was income, you would have got. If this is loss, you will get it. So what will we get? We will get balance. So Mr. X, okay, we are doing Mr. X only, not Mrs. X. So Mr. X will get 6 out of 10, which means he has got a loss from Mrs. X of 78,000. Okay. So you park that. You've calculated, park it. Any other loss, any other business loss case? No. So then this is the only business loss. Just keep it parked. Now we come to income from other sources. Income from other sources, may we have gift received by X's minor son on his birthday from friend. So minor son has received gift, and assume that X's income is higher than Mrs. X's, and X minor son's income will be clubbed with X. Assume that. Okay. So now the gift is also 70,000, so it's more than 50,000, and the gift has been received from friend, so which is not a relative, which means this is taxable. This is a taxable gift. It exceeds 50,000. Now, not only the excess is taxable, the entire amount is taxable. Entire 70,000 is taxable, not just 20,000. Okay. So 70,000 is taxable. Then because this is old regime, we give 1032 exemption, which is of 1,500 per child. So we give 1,500. And then what is the balance which is included? 68,500. Now this is income from other sources. Can we set off current year business loss against income from other sources? Can we set off current year business loss, which has come from Mrs. X in this case? Can we set it off against income from other sources? Nobody is writing. Can we set off current year business loss with income from other sources? What happened? Why is nobody responding? Yes. Okay. All right. Fine. So we can So you've calculated 78,000 above. You use that much. Whatever you can use, 68,500 balance will be carried forward to the next year because it cannot be set off against current year salary income. Okay. Then you have calculated GTI. Now there are some questions about Chapter 6A because this person is in old regime. This is also relevant to us. He has deposited 70,000 in Sukanya Samriddhi scheme and also contributed 40,000 to LIC under 80CCC. So the total 80C he is getting is 70,000. The total 80CCC he is getting is 40,000. And then there is an 80CCD1. You remember contribution to NPS scheme. Employees also contributed to NPS scheme. So employees contribution will come in here. Employees contribution to NPS scheme was how much? 20% of basic, which means 76,000. And less 50,000 reduction, so you'll get an 80CCD 1B. So here you will reduce that. And since it is lower than 42,800 being 10% of salary, right? So that way you're going to calculate 80CCD1. Then total allowed permissible reduction is under 80C, CCC and CCD1 is 1,36,000. CCD1B, you get your contribution to NPS up to 50,000. CCD2, you get employer's contribution to NPS restricted to 14% of basic salary and DA forming part because this employer is central government employer. Okay, so that has come. 80E is governing education, higher education interest loan. That is there. I'm not dealing with too much details about Chapter 6A because it's a separate chapter. Okay, when you do that chapter, you'll understand why it's what has been calculated. I'm just putting it to complete the sum for now. And when you do that chapter, you'll be able to understand the things better. Okay. All right. In this way, you have calculated total income. Now, what are the losses? You have an unabsorbed business loss of 9,500 that you will take. Okay. And that's it. Achha, one more thing which is relevant is that you, in the sum they have mentioned that Mr. X gifted us the sum of 6 lakhs to Mrs. X in 13-14, but did not mention that she invested this money on which day. That is relevant to us. Okay, because that is not mentioned, then we will assume that whatever she has done before 1st April 24. Therefore, on 1st April 24, the total investment as business includes 6 lakhs from her husband. Okay. So getting a gift is one thing from 56 to 10 perspective, but investing it in business and earning profits that therefrom is what is relevant for clubbing perspective. Okay, so we are assuming that the gift that she has got from her husband, she has invested prior to 1st April 24, so that as on 1st April 24, the total capital in business includes capital contribution from husband also. Okay, give a note. All right. So this was question number 15. Question number 16 is easy actually. You can solve it. There are too many items, but not the kind of items that we have not covered. So you can solve for homework. Question number 16. And question number 17. You tell me if you want to solve now or you want to do for homework. Considering we are at 5:45. Thank you so much. So homework. Okay, homework. Okay. So the solution is there, homework. Thank you so much, ma'am, for amazing, interesting lecture. Leaving because I'm going home. Okay. Please, you have your lectures at 6. I understand. 15 minutes I have to give you to at least eat something. Okay. Please do eat. Please do stay hydrated. And apart from studying, please also relax yourselves. Okay. All my best to you. These classes, solutions, cheat sheets will all be uploaded. All my best. All the best wishes to you. Okay, stay well and all the best for your exams. Stay well in life. Thank you. Okay, bye.